Welcome back. You're watching Big Deal, and we are discussing the big process that the AIF industry has embarked upon, that is dematerializing the AIF units. What are the processes, regulations, and what it leads to? So the bigger question from you, Ashish, you did mention that is there a pathway to listing these AIFs in future? Can that be achieved, and is the demat of the first step probably towards it?
The provisions for the AIFs to be able to go down the path of listing already does exist. And it is just that the ecosystem was relatively young and it is now only coming to a phase of a decade plus of its existence. So relatively more mature. And I do anticipate that there will be funds that will explore eventually listing. And if you are having demat format issue, it definitely enables secondary transfers, etc. Also, it's apart from the hassle, the fact that somebody can go out there and get a closure done on a trade. Not that people invest in AIFs from a short-term perspective, but there are liquidity needs that people do have. So all of these things do enable some of these things more efficiently. Not to suggest that people have done it in a rampant way, but the reason is more around the stage at which the ecosystem is, in my lens, rather than any other factor. So yes, to that extent, it is a welcome step and definitely allows for future products and opportunities to be created around these.
Right. So, Rajeev, what do you think about the listing? Is that something that the industry will look at? Do you think that it will make the industry much more robust? And do you think that liquidity needs by way of pledging these units, all that can also be much easier? What is the benefit of that?
So I have a slightly different opinion about listing. I agree with what Ashish said on two counts. One is the fact that listing per se as a provision has existed for the last 10 years. The industry till date hasn't really felt the need for getting units listed. There are issues which I will quickly touch upon. Yes, pledging could be much easier than what is the process today. There's hardly any pledging of units today, thanks to the risks involved in physical statement of accounts and units. So if you see Regulation 14, it really talks about two or three conditions. One is it is only for closed-ended funds. Two is it currently talks about the minimum value to be 1 crore. The trading lot has to be 1 crore. Now, if you look at the fact that the total investment in an AIF, the minimum investment in an AIF today is 1 crore. Investors typically will start getting capital distributions. Now, even if somebody really wants liquidity, and which is one of the benefits of listing AIFs, I am not too sure how a unit value less than 1 crore will get traded on the exchange, because if the trading lot is 1 crore and the investor's already got money out of that 1 crore that is invested, not too sure. Secondly, if you get specifically closed-ended funds, which are Cat 1 and Cat 2, valuation of those, the assets that the AIF has invested in, is more or less done once a year with due permission from LPs.
Right.
So any transfers inter se or interim within the year, I don't know how far fair valuation or actually valuation on that particular trade will be done. So that's another question. So there are a lot of other issues in terms of how listing is really going to pan out and whether there'll be really benefits. So I think the need of the hour is for assuming that there has to be listing, and we have to really take the benefits of providing liquidity to investors. A complete framework has to be established by SEBI, taking into account all these current regulations that exist today and which potentially can, stop any active trading on units on the exchange.
Right. So two different views coming. What's your take on the listing aspect, Siddharth Pai? And of course, for anything to be traded, the entire regulation and framework will have to be created. There's a lot of work that will go into it, as rightly pointed out by Rajeev. But Siddharth, what is your thought?
So Nisha, I think you can actually see why we're known as the alternative investment industry, given the diversity of views that we end up having on any subject to end up actually bringing out, for that matter. I think listing listing actually has become a very, very unique opportunity. I don't think it's fully been fleshed out by the regulator as of now. As Rajeev also mentioned, the industry really hasn't seen the need. But I think there is actually a burning need for it as of now. The AIF regulations are roughly about close to being about 11 years old as of date. If you look at the growth of the AIF industry as well, the average tenure of a fund is anywhere between about 8 to 10 years, with extensions of 2 years each. So there is actually a need where we're seeing a large number of funds actually who have actually maturity as of now. They will have to end up actually liquidating their particular investments as of date, or whether there are any other alternative means that do actually exist. Now, SEBI came out with the liquidation scheme, which is also, they've also already come out with a paper on that. They're already ongoing discussions on that particular matter. But I think listing is something that the industry is actually looking forward to. I think it is actually worth having that particular debate and discussion as time actually ends up actually going bigger. Because even though the provisions, the regulations do actually provide for listing, the lack of clarity on the operational aspects for that matter, even when you speak to the exchanges, is something that needs to actually be discussed. I think if memory serves, I think London and a couple of other areas do end up actually having these sort of vehicles. And the government has spoken very deeply about the need for actually permanent capital vehicles to end up coming about. Indeed, Sequoia US recently, I think in about 2021, 2022, did actually announce that they will end up creating a permanent capital vehicle to have permanent capital and make investments without having the pressure of actually liquidating their fund. I think the listing environment does actually create a very, very good avenue to end up actually exploring something else. So I think DMAT can actually end up becoming the first stage of listing, but we do need to have discussions, not just with the regulator, but the industry as well, as to how those guidelines are. A one-crore minimum tradable lot, how do you end up fractionalizing? Whether we allow retail investors to participate, only accredited investors, discussions are worth having. But I think DMAT going live as of now, it becomes an easier discussion to end up having, and a major milestone has already been reached. So I think it's going to be very exciting times for the alternative industry. We will end up going mainstream because dematting is the most mainstream element you can do, and it will end up holding the industry in good stead.
Right. Your positive outlook on this, Siddharth Pai, is quite infectious. But of course, we'll wait and see how this process really pans out and whether it is versus the liquidation process, as Siddharth was mentioning. So lots to see as this path-breaking move and milestone gets achieved on the AIF industry about dematerializing the units of AIF. Thank you so much, Rajeev, Siddharth, and Ashish, for joining us on this interesting discussion. Thank you so much for watching us, to all our viewers. But stay tuned to CNBC TV 18.